Good morning, everybody. Welcome to the Trading Market Technicals morning call video for June 18th. And tell you what a Friday we had. Kind of quiet, and all of a sudden, risk on. Markets started rallying based on the on optimism of a new pro-Greece austerity New Democratic Party to win. Sure enough, they did win. I was watching that yesterday. And they did win the elections by a margin, but they did win 29.5% of the vote versus 27%, I believe, for the Socialist Party. The only negative here that we had was the New Democratic did not win enough seats to form their own government, so now they have to work with the current Socialist Party. So that's a little negative here. And what happened, as you can see here in front of me, the E-minis 5-minute chart, we opened up 7 points, rallied up to about 9 points, 9 handles here, and then overnight we just started fading away, and now we're down about 175, just trying to ever so slightly come back. So we really need to see what happens here. Also, we have two event risks that are going to be happening: is the G20 summit in Mexico, as well as the Fed speaking again. And what's I believe is happening is that there's going to be a lot of anticipation of a QE3. Now, Fed Bernanke actually, Chairman Bernanke actually stated that it's not going to be at this time. So why they're rallying, I have no idea. But markets like to see some QE, and especially when the G20 announced, summit leaders announced that they will provide money to the banks. That's all we need to hear. That's the reason why we're up at these levels, rallying, because of a lot of central banks here coming in, piling in money into the economy, and traders are buying into that, looking for more quantitative easing, and that's going to push us and prop this market higher. Now, if in fact we do not get that, I could see the markets really fall hard here, and a lot of these traders anticipating that into the news, buying into the news, selling and exiting their positions, and getting some at least a nasty sell-off. I do see one more sell-off coming. I don't think the markets go into new highs here. A lot of indicators are showing overbought reading. We do have a nice bullish pattern that turned out, which was that inverted head and shoulders, which I want to show you guys on the charts. But let's take a look from a perspective review last week. Risk-off mentality was definitely obvious. Best 3 performing sectors was healthcare, consumer staples, and utilities. Right around rose about 1.45, 1.23% respectively. So that's not a real good sign that risk is actually on. We also have market divergence from the S&P versus the Russell, which is a good gauge of risk. S&P making new highs, taking out the highs, actually making new highs currently, where the Russell did not. So that's something that really is a concern. And we need to see further evidence that, hey, risk is on, and we're looking to buy this market here. So problem here for equity markets, if Bernanke does not say that we are not looking at a QE3 right now, we could easily drop at least 8 to 10%, which from this current levels, you're probably looking at 130 or so S&P points. That is not out of the question. So that's something that we want to really keep in mind in the back. Usually in the summer months, markets really don't get too volatile, but making a trip back down to the 1200, 1215, 1220 area in the S&P is still would be bullish on the longer term, and then I think the markets would rally from there, and then probably a nice big finish into the new year. But that's a long way out right now. But just keep in mind, we have these two event risks that are happening, and it's something that traders and investors should know what's happening. So let's take a quick look here, and as you can see, nice big move up, now nice bounce up, follow through from Friday, which was totally amazing to me. If I was long positions, which I'm not, I would be looking to reduce my exposure going into that big event risk. And sure enough, people bought right into that, and they were correct at least for that point. Markets, we're down at 125 right now, and as you can see here, we've recovered a little bit, ever so slightly, but that doesn't show me any good follow through, any good reason. I think now we're going to be looking at the G20 summit and, of course, Bernanke speaking about the QE3. So that's going to be something that's going to be interesting in the cards. Let's take a look at market momentum indicators, like I love to look at, which gives me some sort of a little bit of an edge going into today. We're overbought, as you see, anything above 101, as you know, in these momentum index, slightly. So there's still room to move higher here. So I wouldn't say that overbought is a sell signal, and it's not, but it's something really to take note of. Just say, hey, you know what? Let's be cautious here in the near term. Okay. McClellan Oscillator. Love this indicator. Very, very true indicator. Again, overbought reading, as you can see here. This is the S&P line chart, and we are moving higher, and there is more room to move higher here, as you can see. So we're overbought, but more room to move. So I would say use caution here in the near term. Let's get through these two event risks coming this week, Monday and Tuesday, and then we'll see what happens from there. But I would use caution here. A lot of stocks did move higher and do have our overbought readings. Now, I mentioned on Friday that we had two patterns. We had a head and shoulders pattern in the inverse head and shoulders pattern here on a 30-minute chart and a 60-minute chart of the S&P. And then on the shorter term time frame, we had a head and shoulders pattern. Well, that was negated. The bearish pattern was negated. We did close higher above our neckline here. And this move measures to around the 1397 area here. So we took out the neckline here on Friday. So that's going to be bearish. More likely, these patterns, they usually try to make some sort of a higher low here. And then from here, move higher and break out past here. So that is what we would be looking at, and if that's the case, we would measure somewhere around the 1397, 1400 area. So good pattern. As you can see here in the near term, MACD's crossed over here, looking really, really healthy. Our stochastics are a little bit overbought here, but again, that doesn't mean that the market can't stay higher and move higher from here. So we're looking at a 1397 area. We do have a confirmed inverted head and shoulders, so that's something that that we're going to be looking at playing in the near future. Now, here is where what would concern me a little bit. IWMs, which is the ETF for the Russell 2000 index, and nice volume here. We had nice volume on Friday. As you can see, MACD's crossing over, and our stochastics moving higher as well. But if you look here, and I take out the look at this area. We did not take out this little cluster area here at the 77.5 area. So the Russell 2000 is lagging, and that's something which is a big concern to me. And here's the S&P, and as you can see here, big volume, nice volume coming out. And if you look here, we're at least up into this area here, taking out this this cluster, and we're moving higher in the MACDs and the stochastic. So a little bit of market divergence, which is a concern to me. Look at the diamonds, which gauges the Dow Jones Industrial Average. Real big move higher on volume. Stochastics, MACDs turning up bullish. So this is what my concern is that we have market divergence. Now, again, can the Russell catch up? Absolutely. Russell could catch up to the market, and then we can continue to move higher. I think moving forward, be very cautious in the near term. And again, if something doesn't stand out, cash is a position. Make sure you keep your stops in place. This is definitely a crazy market here. But in the near term, tomorrow we have the Fed, we have G20 summit leaders coming out. So we do have some event risk still at hand here. And it's what I don't like is that they faded the Greek vote. So now we're down $1.20, maybe. Probably before the market opens, maybe let's see if we get some sort of positive turnaround to the upside. A lot of stocks that have been beaten down are looking better. Coal sector, the energy sector, a lot of these sectors we're going to be looking for some plays to the long side if this market could at least hold up, because a lot of these sectors have been just decimated, and these are the sectors that when the market does turn around, they're going to be running for value, and that's going to be something that we're going to be looking at in the near term. Okay, guys, that's really about it. I hope everybody had a great Father's Day for you fathers out there. Today is Monday the 18th. Looking forward to get back to work. And again, keep it light until this market kind of realigns itself, and we get a lot of these headline news coming out of Greece starting to subside a little bit. Again, be cautious here. If this news that comes out does not come as planned, a lot of these traders that bought into this market at these levels will be running for the exits, and we could get a nasty little sell-off here before turning higher. Okay, keep that in mind. Looking forward to seeing everybody tomorrow. We'll talk to you tomorrow. Take care. Have a great day, everybody.